if we're not a plus $1 billion company at the time that we get to production, I'll be shocked. Sure, we could build a bigger project, but where are we going to get the $400-500 million to build it? We're going to blow our brains out. You know, I'm a shareholder. I told you that I own about 8% of the company. I'm greedy, and I hope every other shareholder in my company is greedy too. I do not want to blow our brains out.
Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, please give us a thumbs up. It just helps us understand the companies that you think we should be spending our time, money and effort on. And do leave your comments below. That helps us with the sorts of questions you think we should be asking, how you think we did, and of course what you think of the company. You can also catch this as a podcast, an article or a transcription on cruxinvestor.com. And for our Crux Club early access members, you get to see this video first. If you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And for more videos like this, click the notification bell. We spoke earlier today to Alex Black, CEO of Rio2, a man with a plan, it seems. Having done it twice before, creating huge shareholder value, he's looking to get into a situation where he can start building the mine next year. They've got a very robust PFS and just waiting on EIA at the moment. We talked to him about some of the issues that they've been dealing with and how they hope to go from where they are today to the point where it can actually start constructing the mine next year. So we talk about a lot of different topics. We talk about the market as a whole, comps, why he's not happy with the share price, despite it having gone from 45 cents when we last spoke to him to 77 cents in 3 short months. Take a look in the description below at some of the topics we discuss. Anything interests you in particular, click on the number beside the topic. That's a timestamp, and I'll jump you to that part of the video. Otherwise, enjoy what he has to say. Alex, how are you doing, sir?
Hey, Matt. How you doing?
Not bad.
All good here.
Not bad. Been busy. We haven't spoken in a while, so I wanted to catch up and see how you are. I see the taste in shirts is still there.
Yeah, I got dressed up for you as Latin American correspondent for Crux Investor.
Oh.
I decided to put something almost Latino on, but yeah. So how are things up there in the UK?
We're good. We're kind of holding up. I think everyone's a little bit bored, to be honest, but I think most people are doing the right things. But the shops, the pubs are open. Oh boy, they're rammed. They're absolutely rammed. People have been missing the pub, apparently.
Yeah, I mean, look, you know, that's the whole thing. Too many people missing too many luxuries, and you know what this virus needs is people to take a step back and just do without for a period of time and try and prevent this virus from spreading. Right now here in Latin America, it's devastating. I mean, all the way from Mexico through south, and obviously north of Mexico as well. It's pretty rampant as well, and it's just sad. And there's just simple things you can do to try and mitigate it. You can't stop it, but you can mitigate it. But a lot of people choose not to do so.
Well, I mean, yeah, those are wise words indeed. And we've seen some of the numbers coming out of South America, and as you referenced there, the US of A as well. Things are not looking good. But what's the reality on the street? Or and again, I know we're going to talk about work, but just in terms of living there, are you seeing those impacts?
Oh, well, I'm in a bubble. I live in San Isidro, which is an inner suburb of Lima, and we are all hunkered down here. I mean, we do leave and we do go out in the street, we do go shopping and all that sort of thing, but we do that with all the strictest protocols we can think of to do that. Now, the issue is that the rest of Lima, which is a 10 million population, can't do that because informal employment here is 70% of the workforce. 40% of the people here in Peru don't own fridges. Simple things like that. So when you talk about lockdown, how can you lock down if you can't stick stuff in the fridge and ride out a week without going outside? So there's all sorts of issues related to living in a developed part of the world, undeveloped part of the world, which is where we are. And it's really sad to see, because I'll tell you, watching the news every night is not a happy event.
What's the government doing about this, and what are their instructions?
They've done the best they can. I mean, they started off when Spain went down lockdown. The Peruvian government did the same thing. It then started fiscal stimulus. I mean, the economy here in Peru has been very, very good over many years. So they did have some firepower to do fiscal stimulus. But the problem was the stimulus wasn't getting out to everybody because the 70% of informal workers don't appear anywhere, right? So you can't get money to them. And so it worked, but it didn't work. They did their best. Isolation wasn't working. Now it's all about protocols. It's all about mask, keep your distance and keep washing your hands and try and mitigate what's going on. That's the key.
Yeah, I mean, it's a familiar story we're hearing from the different people we're talking to all around South America, but I guess not everyone's listening, looking at the numbers. But let's not make this a show about COVID. Let's talk about you, because since I last spoke to you, which was sort of the end of April, your shares have gone from 45 cents up to 77 cents, and you were telling me before the show you weren't happy with that. And we're going to find out why, because most people would be very, very happy with that. So look, we'll get into it. Let's kick off with the usual 1 minute overview of the company, and then we'll pick it up from there.
Okay, Rio2 is a Canadian listed, Lima listed, OTC QX listed junior gold company. Our principal asset is the Fenix Gold Project, located in the Atacama region, Maricunga gold belt of Chile. It's the largest undeveloped gold oxide heap leach project in the Americas, with 5 million ounces of M&I constrained within a $1,500 pit shell. We've focused our PFS on a $1,250 gold price, and so our starter project, which is focused on 1.8 million of those 5 million ounces of reserves, are bulletproof down to $1,100 gold. That's our principal asset. Myself, I'm the founder, president, CEO. I own 15 million shares in the company, which accounts for about 8% of ownership on an undiluted basis. I paid about $2.5 million over the last 4 years in buying those shares. I get paid $300,000 a year, and I don't sit on any other boards or any other advisory committees. So I'm 100% focused on Rio2.
I love that bit. I love the bit at the end. 2 CEOs have followed your lead on that one. Only 2 since we spoke, which is a start.
I challenge the rest to follow.
we shall see. They still look a little bit nervous when I talk to them. Look, there's one of the stories I like. Okay, I think you've put together a team who's going to build a mine. So I think that's, and there are very few mines that actually get built. So let me try and, if I may, just cover off some of the points which have been raised by watchers of the show, followers, subscribers, etc., just to help me understand it a little bit more detail, and for them to perhaps hear it from you rather than me.
Hit me.
Okay.
Hit me.
Are you ready? So we're going to start with the easy ones. Let's go with, you've covered how much you own of the company, and you bought in the open market, and I think that was a big question which kept coming up time and time again. So you've answered that one, but let's start with the track record. Can you just remind people what your track record was in creating shareholder value, please?
Yeah, just quickly. I mean, we are the same team that ran Rio Alto Mining back between 2009 and 2015. In 2009, our market cap was about $12 million. We acquired the La Reina Gold Project in Peru. We quickly ran that through the permitting and construction phase and production phase. We got that up to about 220,000 ounces a year. That was a gold oxide heap leach project. We then acquired Saladin in 2014. They had the Shahuindo Gold Project in Peru. We took that on, we advanced that through to construction. And then in 2015, we were acquired by Tahoe Resources for $1.2 billion. The interesting thing about that rise from 12 million to 1.2 billion was that we only raised $80 million of equity during that period of time. That's the only amount of equity. And so you're going to see the same thing here with us. We're going to be very, very stingy on equity. Which means people who like this story are going to have to buy us in the market, not wait for equity financings. And so that's who we are. So we've built 2 gold mines in the last 10 years. We created significant value for our shareholders along the way. And this is the 3rd mine that we are going to be building, with construction starting next year.
Okay. Those, I mean, great numbers, fantastic numbers, and you've got a track record of delivering. But I need you to show me why this is going to be a cookie cutter approach to delivering the same value. Why you can repeat that again. So let's start off with the current structure, if you don't mind, of the company in terms of shares out, etc.
Yeah, we've got about 180 million shares out right now. On a fully diluted basis, we've got about 240 million, and that's why I'm not going to be rushing to do any equity anytime soon. And we can talk more about financing the project going forward. We have about, as of the end of the last quarter, we're about $14 million Canadian in the bank. That's probably down to about 11, 12 right now. We have been seeing warrants being exercised. Unfortunately, the previous financings that we did, the last two previous financings, we had to do warrants because we were in a bad time. It was before this rise in the gold price. Now, today, you would never do a warrant exercise or issuance for a real company and real asset. So, unfortunately, we've got a bunch of warrants, but those warrants have been starting to trickle in, which is good. We're fully financed all the way through to the construction phase. So that's why we don't have to raise any more equity anytime soon. And the other thing is that at 70 odd cents that you were saying our share price is at, that gives us a valuation of about 140 million. That's where I think the talk is. Once we get our project into production, and given what's happening with the gold price and the gold environment right now, if we're not a plus $1 billion company at the time that we get to production, I'll be shocked. And so that's the opportunity we have here. I'm disappointed with the performance of our share price. I mean, that sits with me as CEO. I kick my ass every day because I don't think we deserve that valuation. We should be a multiple ahead of that, but it is what it is. And I think part of the reason is that there is this overhang of the thought that we are going to do an equity financing of some size to finance this project, and it's my job to try and mitigate that.
Right. So you're saying you've no intention of, you can't rule it out, but you've no intention of doing an equity raising?
I'm doing everything possible, and we're looking at all the traditional forms of financing this project, and we're looking at unconventional forms as well.
Okay.
One of the things when we built La Arena back in 2010, we took down a gold loan with Red Kite back in those days. That was one of the first gold loans ever done to a company like us by a company like Red Kite. It actually set Red Kite up and it set us up. Now, we were at the forefront. We were innovators. We are looking at, I can't say exactly the same recipe, but we are looking at innovative ways of using what investors are looking for in this market to deploy capital, and we are hoping that we can come up with something innovative to fund this project.
I mean, we've seen some quite funky structures from companies, in South America, like Gran Colombia, where they issued bonds and paid it down with gold and cash. I mean, are you talking that sort of level of interesting?
We might. I mean, and you just saw that Gran Colombia is a large shareholder of a company called Caldas, and Caldas have just done a vanilla, well, relatively vanilla, wheat and precious metals stream, and they're going to do an equity issuance, and they're doing one right now, I think, for $45 million. But that's vanilla, right? I'm talking about not vanilla, and if we can pull something off as what we're thinking, we're going to be right at the forefront, and I think we're going to set a tone for other people to follow us.
Yeah, I mean, essentially, like I always say, like money's money. It's just the terms and the cost of that money that is the interesting bit. Cool.
There are so many people out there that are trying to put money into fixed income and they're getting no returns, right? So that's the crowd to attract, is those people that can't get sufficient returns out there, and provide them with an incentive, get involved in a gold-backed return, is what we're talking about.
Yeah, I think that would be very, very interesting. Look, you'll keep us up to date as that develops, yep. I'm sure. Let me get into the asset first, because again, I want to understand this cookie cutter approach. Again, I want to understand what I'm buying into here. Okay, the team's track record I get. But with regards to the asset, this is the largest. The largest of anything is always quite interesting, but usually. But the largest gold heap leach oxide project in the Americas sounds quite interesting. Why do you make that claim?
Well, from research, if we look at a neighbour that just put out a press release today, Kinross, talking about Lobo Marte. Lobo Marte is over 6 million ounces, but it's not a pure gold oxide heap leach project because it comes with copper, and therefore there's a SART process involved. And you can see that their capex that they've predicted at the pre-feasibility level, which is likely to be many times, well, a lot more than what it is $1 billion. So when you look at, they report very low AISC, but their IRR is in the low 20s. So you go, well, what's going on there? And the dynamic there is it's just going to be huge capex to build. Now, we have a project that if we were to build it out day one, yes, we would have a big capex. But we've decided to focus on a small startup project, which will cost us about $120 million. Exactly the same cookie cutter recipe as what we used at La Reina and Shahuindo. Start small and build up from there. That's what we're good at. And also accelerating ourselves to that point. I mean, we're in the best bull market for gold that I've seen in my 40 years, and who knows how long it's going to go for. And it's all about rushing as quickly as you can to get to the point where you're producing gold bars. And that's what we're about.
Okay, so I appreciate that. You did, though, inherit a different kind of PFS, a much bigger opportunity, I think. And
there is a bigger opportunity there. Our throughput rate is going to be 20,000 tonnes a day for the starter project. We believe and the biggest constraint, two constraints are the gold price and water, right? Now we're going to truck the water from Copiapo to the project for the starter project, but for the larger project, we're going to have to look at a larger source of water, and we're working on that right now. Put that aside, if we had that larger source of water, we can get the production rate up to about 100,000 tonnes a day from 20,000, so that's 5 times more, and we'd be on a run rate of about 250 to 300,000 ounces of gold production at that run rate. Now, once we settle on that water option, our intention is to do a PEA so we can show that, right? We can say, this is where we're going. However, we're going to start here. Now, all the expansions that we did at La Reina and Shahuindo were funded from cash flow. And that's exactly what we intend to do here. Get started, $120 million initial capex, some sustaining capex along the way, but cash flow will hopefully set us up for the larger project as we go ahead. That's the model. That's what we intend to try and achieve. And we've done it twice before, so there's no reason why we can't.
It's quite interesting, actually, in this current gold bull market, people are getting quite excited. I think there's a lot of companies perhaps don't necessarily deserve to be where they are getting a lot of voice, they're getting a lot of notice, their share price is going through the roof, market cap increasing. They don't look to me like they're ever going to get into production, but you were talking to me just before we started, and I said, congratulations on the share price, and you're like, no, not happy. Why?
Well, I mean, I don't like to compare us to other developer peers because it's like comparing apples with oranges because, but we're in the lower quartile of valuations of those developers, the lower quartile. And so I'm not happy. And that's my responsibility, and I've got to change that. We should be in this market with what we've got and going into construction next year, I would say at least a $300 to $350 million company. We're a $140 million company. So we're lagging this bull run in this market, but we will catch up.
Okay.
We will catch up.
Well, let me talk about a couple of things you just took off the table. I want to bring them back on the table, which is, and it's an ongoing commentary in the marketplace. I know you've answered them with us in the past, but I do want you to say it again, which is, one, why did you reduce the size of the PFS in a gold bull environment, or did you?
It wasn't. So, here we go. We did our PFS last year. It was just when gold was starting to turn. We published the PFS back in August of last year. We decided to focus on 1250. The economics were, or the financial model was done at 1300. This project that we're going to start breaks even 1100. Now, let me tell you, from a mining perspective, because we are miners, we're not promoters, it's all about doability. So we feel very comfortable that we've got a modest capex of $120 million that we can start this project. And let me tell you, nothing goes straight forward in the mining game. So when you build a project, you want to ease into it. You want to see how it performs. It's like a bucking bull for the first 12 months. You know, people will ask you, what's your operating cost? And my answer to that always will be, I got no clue, you know, because we're sitting on a bucking horse. So you want that luxury of being able to ride the horse and then get it on a steady plane, break the horse in, and then you're off and running. So that's one thing that we did really well with La Reina Shahuindo. We're going to do the same here. Sure, we could build a bigger project, but where are we going to get the $400, $500 million to build it, right? We're going to blow our brains out. You know, I'm a shareholder. I told you that I own about 8% of the company. I'm greedy, and I hope every other shareholder in my company is greedy too. I do not want to blow our brains out. Now, promoter company A, B, C, or D, who don't have a lot of skin in the game, quite honestly don't give a shit, right? They just go and issue stock, and there's lots of people issuing stock right now. And I hate this term, but when the ducks are quacking, you know, I mean, I hate that. You know, for me, it's like, no, make it look like you don't need any money and force investors to buy in the market.
Yeah, okay. I can see that. I can see that. Second point, water. Let's come back to that water thing. I know you said you come up with a couple of options for now, but it involves trucking, right? And we've talked about in the past, you know, there's all sorts of potential issues with trucking, aren't there?
No, we've got one option right now.
I thought you have two routes. You're trucking water through two routes.
Yeah, we've got two routes, just to show people that have asked us the question about, okay, what happens when you're trucking through Copiapo and there's a problem with traffic, etc. You know, what's your options? And there is another route, and that route we could take 100% of the time if we really wanted to, and it'll only impact our operating cost by about $30 an ounce. So not a killer solution. So we have got a workable solution. One of the reasons we chose that as well is we've taken the water equation out of our EIA, right, which is currently in review. And so we've simplified the whole EIA process. By simplifying the whole EIA process, we've accelerated the timeframe. Once again, going back to what I said, we're all about running as fast as we can to get to production. Because the day I hold that gold bar up with my team is going to be the day that we've executed and delivered as we've said. Now, it's getting there as fast as you can.
Okay, so you said, what's the total number on using trucks to deliver the water in terms of, you know, dollar per ounce?
It's about $100 an ounce. And if you go the longer route, it's about $130 an ounce. So it's not a deal breaker. And that $100 an ounce is built into our $1,000 AISC that we've shown in our PFS already. So it's not as though, you know, we've buried the cost somewhere. And, you know, it's very straightforward. There's a truck every 20 minutes leaving the water retreatment facility that we're going to buy the water from. We're going to have trucks carrying diesel. We're going to have trucks carrying other consumables. Kinross are going to have trucks going up there because they're starting up La Coipa, which should reach production when we reach production at Fenix. So, you know, it's a tourist road, it's not hugely covered in traffic. And the other thing is there's nothing between Copiapo and the project so far as, you know, villages or settlements or people or houses or anything. It's, you know, it's inhospitable part of the world in the Atacama desert at altitude as you get closer to our project.
So you're saying other people are trucking water into their projects. That's just...
No, I'm just saying other people are trucking consumables to their projects. What's the difference about trucking water to a project? And people have asked me, so what happens if there's an event and you can't get water up there? You know, we're going to have at least 2 weeks of water built up at the project. So that's going to be our reserve. Like every other consumable, we'll have 2 weeks of fuel, we'll have 2 weeks of cyanide, we'll have two weeks of everything, so we'll do all the right things to mitigate any potential issues that happen, natural disasters or whatever happens during the life of our operation.
So what's the long-term solution for the water though?
Long-term solution we're hopeful of is twofold. It's either to talk to somebody that's got water rights in the area that are not using them. That means pulling water out of the ground. That is doable. It's just a process to get permitted, but that will dovetail in well, because if we got water rights today and it took us 3 years or 4 years to get those permitted, well, that's fine, because that will be in year 2 of our starter project, and we can dovetail that in. The other option is to pipe water from the water retreatment facility from Copiapo to our project. That was in the initial pre-feasibility study that was done by Atacama Pacific back in 2014. That is doable. That comes with about $140, $150 million of capex for pipe and pumps to get the water up there. You can do it. It can happen. Once again, we will be picking a solution in the not too distant future about this one or that one, and we will go in that direction, and we will show how that will dovetail in and what that will entail from a capex perspective to dovetail in with the expansion of the project.
I mean, do you see anything that will cause you to not be able to hit your $1,000 AISC? What are the issues?
No, we've been rather conservative with our pre-feasibility study. We think that is definitely achievable, and we hope with the infrastructure that we bought close to the project a few months ago, whereby we have a water bore that we're currently reviewing and checking to see what the capacity of that bore actually is, because we may be able to expand it. At the moment, it's 5 litres a second, which is 20% of the water that we need for our starter project. So all of a sudden, we've cut 20% off the costs of getting the water up the road. We've got a camp there that we'll be refurbing and using as our construction camp and our base for our operations. This infrastructure is at 3,200 metres above sea level, so it's a great altitude to be working at, as opposed to the mine, which is 20 kilometres away at 4,500 metres. And there is also a power line that goes right through the infrastructure that we've got access to, that in the future, because we're going to start our project with gensets, but in the future we can tie into the grid, and that'll reduce our OPEX even further. So, and also a sensible thing to do for the larger project.
What we've been struggling with is to try and find comps for you, because there's nothing quite like you.
I think the best comp for me, likewise, but it's not in the Americas. It's Patrick Downey's,
Ozone. The Ozone guys?
Yeah, in Ozone.
Yeah. Okay.
That's about 5 million ounces. It's very similar characteristics. And it's interesting, I mentioned on social media the other day, Patrick's company plus my company, total valuation is about $400 million, I think it is, if you put the two together. And I was comparing it to Rupert Resources, who are drilling holes in Finland, and they were raising money, and they had a nearly $600 million market value. And that's what you were saying earlier about the disparity between, sexy drilling versus somebody who's going to build a mine. But eventually we'll bypass that and go magnitudes ahead of that, both Patrick and ourselves. So I think that's probably the closest I can think of.
But why do you say that? That's just in terms of valuation compared to what you've got. But I'm trying to think about, are there companies in the Americas? So first of all, I buy that. I buy the Ozone comp from that perspective. But in terms of what else is happening in the Americas at the moment, the ability to create meaningful wealth and return for shareholders, are you seeing anything that you think, well, that's...
No, there's a few development projects that are probably 4 to 5 years out. And will they capitalize on this cycle? I got no idea. That's too far for me. I remember 2 years ago, people were complaining we were 3 years out, but we've quickly caught that up. But no, there's some interesting stuff out there in the Americas, but nothing like this, and nothing that's just about ready to go. I mean, if you look at Pure Gold, they're building now. They're about to come into production, but that's an underground show. There's a handful of guys that are going to be constructing next year. I mean, less than a handful probably. I'm talking about less than 5. And Patrick and myself and my team are 2 of them.
No, it's exciting times. You've got a bit to do. Well, a bit less since we last spoke to do, but to do that. Cash is good. What are you waiting for in terms of program? I'm trying to find fault with this. So what are the things that you're still having to deliver between now and then?
We're dealing with the constraints of COVID. COVID-19 has impacted Chile, and we don't know right now what that impact will be on us. Now, when I talk about impact, I'm talking about timing, right? Because the Chilean authorities are very bureaucratic. They work at a different pace to what we used to here in Peru, for example, and what we did here in Peru. So we're constantly lobbying, pushing, keeping things going, providing all the facilities possible. One of the processes in the EIA process that the government runs is a community consultation meeting that happens right at the beginning of the EIA process. The problem with COVID is that hasn't happened in our case because you can't meet in groups. So now we're working with the authorities in providing virtual resources for the communities they want to consult to have that meeting, right? So, but that's taking some effort because it's different, right? And some bureaucratic groups find it difficult to adopt different things, right? And out of the box things. So, but we're managing that. What other things? Financing. I talk about being innovative. Let's see what happens. There's no lack of interest in financing this project. I know that. It just depends on how far over we want to bend over at the end of the day on the deal that we want to take. But once again, we've been there before. We know what we're looking for. We're not naive, and we will do the best deal we can for our shareholders. So we're on track. We're going to be starting to build things early next year. There'll be lead order items, and that's going to be part of the financing trick, is going to be getting money to enable us to start spending early next year, start building things out, and getting towards the end of the year where we go into it, really hard.
Alex, thanks for that rundown. I think that, like I say, I do say well done for getting that share price going, motoring again. I know it's not as much as you want.
But I didn't do anything. That was, all boats have risen in this gold price. Once again, I have not created any value, and so I'm kicking myself because I haven't. There are some reasons for that, because I'm sort of in this unfortunate, boring development stage, but I'm not happy, and I have not created the value that could have been created given the comparatives that are out there. But we're a different style of company to a lot of those companies.
You're beating yourself up and going, I haven't created value. Yes. I should do more. So yes. Tell me, given you know what you haven't done, tell me, do you know what you need to do to create that value?
No, I think there's, everybody has hindsight moments. We were hopeful of acquiring a couple of other assets along the way. We never did, not for any reason. That's just the way M&A goes. That would have given us a, bit of other fruit to what we were doing. When you have one asset in a company, it's tough. And Patrick's going through the same thing with Orzo. So one asset companies do find it tough. What I have to do is just continue to execute and deliver. The value will come. But I am a little frustrated, and I am, self-flogging myself, whatever you want to call it, because I missed, maybe I missed a couple of things that I could have done that could have capitalized on the situation. But we're in it for the long haul. Once again, boats are rising and a lot of them will sink and only a few will stay at the top, right? And we're going to be one of those at the top, that's for sure. So that's the end game. But at the moment, we just got to watch some of these share prices going parabolic. And that's the other good thing. I don't want to see my share price actually going parabolic because, gravity also always works in this market, right? You see parabolic curves and there's always the other side of the curve. I don't care what sort of bull view you have. There's always the other side of the curve. The idea is to go up slowly, gradually, and then really start to create value. And you can see that in all the producers, all the mid-tiers that are producing. It's steady she goes and value will come.
Thank you very much. Stay in touch.
Thanks,
pick up the phone and let us know how you're
getting
on.
And just
right?
to remind everybody, I'm always accessible. My email address is alex.black@rio2.com. I respond to every email that I receive. I even hook up with people and tell them to call me back and, we talk on the phone, whatever. I'm an open book.
And you're on social media too. We've seen a few of those comments. Why not?
Yeah, some people like it, some people hate it, but anyway, there you go.
You're a star. We will speak to you again soon. Thank you, Alex.